Hello and welcome to the weekly commodity market update. I'm Brownfield anchor Will Robinson, joined as always by the University of Missouri's Ben Brown. Hey, Ben.
Good morning, Will. How are you?
I'm doing well. It's a nice sunny day, but thankfully not nearly as hot as last week.
Yeah, no, we did get a little bit of a break yesterday, or at least over the weekend, with some cooler temps and some breeze, which was nice. However, I think it's going to get hot again this week. I saw where the high for today is like 97. So
Well, when you're in mid-Missouri, it can only stay nice for so long before it has to shift to some sort of weather extreme one way or the other. So
that's all right. We need rain though. I went home over the weekend to Western Missouri to see my folks, and it is dry in Western Missouri. They need rain. Of course, we need rain here in Central Missouri, and there's places across the country that need rain. So a welcome rain shower would be nice.
Well, it's kind of like an adage that I have one farmer that I talk to. He tells me he's like, we're always just 2 weeks away from drought, which I mean,
Yeah,
it's always true, especially here in the Midwest. So,
that's right.
looking at where we sit right now in the markets, we coming off of the holiday weekend. So markets were closed yesterday, but what changes did we see week over week?
Yeah. So old crop July corn up 4 cents to $7.67. New crop December corn down 8 cents to $7.10. But that really doesn't tell the story of kind of some of the swings we saw last week on what would be relatively moderate changes on the week. And then old crop soybeans for July down 34 cents. New crop soybeans in November down 28 cents to $15.10. Those soybean oil markets down over 7 cents per pound on the week to 72 cents. Soybean meal up $15 per short ton to $438. And then new crop July wheat again down 37 cents to $10.19.
And then looking at some adjustments on the local basis, what are you seeing there?
Yeah, no, quite a few changes actually on the basis market. So old crop soybean basis week over week rose across the entire country at least by 5 cents, except for the Mississippi River market, where it fell hard. Fell hard by about the tune of 25 to 30 cents week over week. Compared to last month, basis has diverged, rising in the Eastern Corn Belt and falling in the Western Corn Belt. That largely matches some of the planting progress that we've seen across the country. Slow planting progress in the Eastern Corn Belt, relatively normal planting progress here in the West. You look at old crop soybean basis, against what we would normally consider a normal basis, and largely lower across most of the country. Again, that Eastern Corn Belt, Ohio, Indiana, kind of being the oddball out there, but some relatively low basis markets, elevators largely using the futures market to do the work of demand signals, to pull grain into the elevator and slowing it down when they don't need it. Old crop corn basis was mixed week over week with no noticeable patterns across the country. A little bit softer in Indiana and Ohio, but that was about it. Compared to last month, corn basis has increased across the country with the largest gains in Iowa, southern Minnesota, and eastern Nebraska, largely due to the ethanol markets maintaining strong demand pulls.
So obviously, it's a little bit of a spread in the basis there, depending on where you're at, like you said. But what kind of highlights have you seen from last week carrying into this week? What's really driving the market right now?
Yeah, and it was just kind of it was kind of a little bit of an odd week because we had some big reports come out that we don't normally associate with commodity markets, but we'll talk about those here. U.S. ethanol production was up 21,000 barrels per day last week. That brings it up to 1.06 million barrels per week. So again, ethanol production remains relatively strong. Corn used for ethanol was nearly 105 million bushels, running 8.3% higher year over year from the same week last year. The National Oilseed Processors Association reported their members, which again, their members represent about 95% of all soybeans crushed in the United States. They reported their members crushed 171.1 million bushels in the month of May. That was about 500,000 less than what traders had anticipated, but still up from April of this year and then May of 2021. Cumulative crush sits 21 million bushels ahead of last year's pace, but that's well below USDA's current crush estimate for the year. So maybe some potential revisions there. Soybean oil stocks of 1.77 billion pounds were above trader expectations, but down month over month, again, kind of relative to those, maybe bearish sentiment. In the soybean oil complex, The Federal Reserve increased their federal funds rate, which is a short-term interest rate, 75 basis points last Wednesday, which was the largest since 1994. Export sales last Thursday were soft across the board. Old crop corn export sales put in a new marketing year low of 5.5 million bushels. Soybeans, grain, sorghum, and wheat were all down week over week. Soybeans did see another 15 million bushels of new crop sales that continue to add to their already impressive 2022-2023 new crop soybean exports.
So really, it sounds like there's a lot of either slightly bearish or just a lot of middling factors right now that are going on in the markets. It's kind of leading to this kind of slow lull that we're falling into.
Yeah, no, and I think so there is quite a bit of chatter over the weekend of the weather forecast continues to remain dry for late July and August. The latest one maybe even showed a little bit drier than what we had seen in some parts, a little bit better in others. And people continued to wonder, how could the weather forecast turn drier and the markets fall heading into today? And we're just kind of in this period of time where traders, especially those that are in and out in a relatively quick period of time, or those that are trading lots of contracts or high volumes contracts, are basically taking the gains when they can get them. So if they see a profit opportunity, they're taking that and living to fight another day. Farmers are also selling. We see high amounts of early season sales for corn, soybeans, and spring wheat across the board. That's maybe not surprising given that we have high costs and people are trying to protect revenue, given that there's higher costs this year than what we've seen. But it's also maybe a little bit surprising given that some of the forecasts, especially those in the Western Corn Belt, dealing with dryness and drought, maybe concerned about having a crop to sell at the end of the season. So, I think you're seeing elevators not having to work near as hard to maybe lock in some of those new crop sales because farmers are willing to commit to delivery at this point. So.
Well, and talking about that, maybe ignoring a potential market fundamental, with the dryness forecasts increasing, do you see with how, elevated market prices still remain, and then plus looking at how high costs are, do you think that the market might somewhat ignore some of those fundamentals going forward until we get a better picture of what's going on in a macroeconomic sense?
So that really is a great question, Will, and I'm not just saying that to buy time so I can come up with an answer. I think to me there was time periods last week where I really felt like the commodity markets were experiencing some of this spillover from the general market, and we were seeing oil down. We were seeing some other things down on the week. Stock market was down. However, they've kind of turned the corner, and stock market's back up today, or to start the day, and oil markets are kind of moderating to maybe even slightly up. And so I look at this and say, maybe we are getting into a period where commodity markets are closely aligned with the general market sentiment in terms of the overall health of the economy. But to your specific question, fundamentals are continuously driving this market. It's just a matter of there's so many competing interests. It's not just one thing that's kind of coming into the minds of traders and expectations. I'll give you a prime example. South America's corn crop looks to be a lot better than what everybody kind of anticipated it coming in to the year. And I think that's weighing both in terms of the current crop and the fact that Brazil could have more export potential. But I also think the markets are looking longer term and saying, hey, if this corn crop in South America faced everything it did this year and they're still going to get a decent crop, not a record, but a decent crop, does that encourage Brazil producers to plant even more corn next year because they feel like they have the confidence that even amongst all these challenges that they can produce a decent crop? And so I think the market's taking that into account as well.
Well, looking at South America is pretty interesting because watching that the drought conditions develop in South America, the storyline was, well, there's these ongoing drought conditions, so we're expecting crop outlooks to get worse continually. But then, as the drought somewhat persisted, conditions didn't really fall to match, which was a little bit interesting. So you imagine, like you said, that would kind of build in pressure into the market from a U.S. domestic producer standpoint as maybe a threat, or a growing competitor.
Oh, absolutely. I think for a couple of years now, we've seen Brazil continuously grow their corn acreage. They continuously grow their second crop corn behind their full season soybeans or their first crop soybeans. And I think that's going to continue to provide export competition for U.S. producers. That's pretty bearish, but I think the bullish factor here is that there's growing economies, China, that need corn and are going to continue to buy corn. And so I think, you've got on one side more competition, but on the other side, you got a growing demand base for the product as well. So I think overall, the market is maybe just holding pat, trading in a sideways pattern for the next couple of weeks until we get through some of these weather patterns this summer.
So as we go through this transitional phase that we're in right now with the growing season, we're really, at the very, very tail end of planting. There's some replant going on still and things like that. But we're really starting to enter the actual, the start of the middle of the growing season, I guess, when you're watching weather conditions. Like you mentioned, it's getting drier in western Missouri and in central Missouri. So at what point does dryness domestically start playing a larger factor within the market?
So it always does. Anytime a weather forecast comes out to where traders think that it's going to hit dry and warm during a pollination period, they get antsy, I guess is what I would say. And it's become more and more instant all the time. The interesting thing is when we think about yields, so much of the yield forecast and the yield models take into account current crop conditions plus the forecast for weather. And it's those current crop conditions that always people forget about. The crop that's growing in parts of the country, and I haven't seen the crop in the northern part of the region, so Iowa, Minnesota, northern Illinois, Wisconsin. I haven't looked at the crop in that area. But for at least the crop in the southern part of the Corn Belt, it looks good. The crop condition is holding. It's amazing what we've been able to do with technology and hybrids over the last couple of decades, really the last decade in particular. So the crop looks good. You get places, the old adage is knee high by the 4th of July. Shoot, we're going to have some corn that's shoulder height, if not head high by the 4th of July for people that got it in early. And I know for those listeners in the Eastern Corn Belt, Ohio and Indiana, and you've got ankle high corn, you're probably not going to get there. But certainly, the corn across the country is looking good, or at least from what I've seen. It's just going to all pollinate at different periods of time. So I don't think there's one specific period this summer that's going to have a major are going to be the major determinant for the majority of the corn crop. I think you're just going to have corn that's pollinating at all different times. It's going to depend on weather on different weeks. And so therefore, a period of time where we would normally see dryness and drought impact the markets or get the markets antsy, I don't think is going to play as big of a role this year.
So really just to summarize that, it might soften that at the height of when that would normally impact the markets, but maybe, increase its presence generally across the board, at any given time. So, a little give and take there, kind of spreading your eggs across several baskets there, which, can be a good thing, at least a safety bet.
Yeah.
So yeah, definitely something to keep an eye on, farmers watching the weather moving forward. So other reports to keep an eye on, or reports in general to keep an eye on. Everything's been moved back a day this week because of the federal holiday on Monday. So the ethanol report that's coming out on Thursday, and then export sales along with cattle on feed for you livestock folk, that comes out on Friday. Ben, as always, I appreciate you joining me this morning. If you'd like to learn more about us or our counterparts with a weekly livestock market update, you can do so at brownfieldagnews.com. I'm Will Robinson on Brownfield.